Today we are going to discuss about national income concepts. First we will see what is national income. National income is the money value of all the final goods and services produced by a country during a financial year, or it is the income of the people of a nation during a year. Here, final goods refers to the goods used for final consumption and not again subjected to a process of production of other goods. For example, clothes, house, TV, etc. National income data used to measure the economic growth of a nation, or it is the index of economic growth. Now we will see what are the important concepts of national income. The measurement of national income accounts for different concepts that have a significant role while determining its value. The important concepts of national income are: first one is gross domestic product or GDP. GDP is the money value of all the final goods and services produced in the domestic territory of a country during a financial year. GDP is a very important aggregate for macroeconomic assessment. It is generally recognized to be the primary measure. It takes into account income earned domestically by foreigners, but it excludes income earned nationals living abroad. GDP can be estimated both at the market prices and at the factor cost. GDP at market prices is the money value of all the final goods and services produced in the domestic territory of a country during 1 year, estimated at the prices prevailing in the market. And GDP at factor cost is the estimation of gross domestic product in terms of the earnings of factors of production. We can express GDP at market prices equal to gross national product at market prices minus net factor income from abroad, or GDP at factor cost plus net indirect taxes. GDP at factor cost is equal to GDP at market price minus net indirect taxes. Next one is gross national product. Gross national product is the total money value of all goods and services produced by the nationals of a country within the country or outside the country. It is the sum of the gross domestic product and the net factor income from abroad. Whatever has been produced by the nationals of a country, whether inside or outside the country, will form the gross national product of the country. Now we will see what is NNP or net national product. Net national product is the total money value of all final goods and services produced by a country in a year less depreciation. Or NNP is the current flow of goods and services in a nation during a year. Production of goods and services involve depreciation of capital assets, but the total value of output includes depreciation also. So we have to deduct the value of depreciation from the value of GNP for arriving at the value of net national product. Then now we can express net national product as equal to GNP minus depreciation, or gross national product minus depreciation. This NNP can also be estimated both at market price and at factor cost. Net national product at market price is the market value of all goods and services after providing for depreciation of capital assets. Capital goods like machinery and equipment depreciate in value as a result of their use in the production process. They are to be replaced after some time. This requires retaining a part of the GNP for replacing them. This amount is known as depreciation charges. When depreciation charges are deducted from the GNP at market prices, we get NNP at market prices or net national product at market prices. This is also called national income at market prices. Now we can express net national product at market prices is equal to GNP at market prices minus depreciation. Now we will see NNP at factor cost. Net national product at factor cost is the volume of commodities and services turned out during an accounting year counted without duplication. Net national product at factor cost and national income are one and the same. It is the net value added at factor cost in an economy during 1 year. Now we can express net national product at factor cost or national income equal to GNP at factor cost minus depreciation, that is equal to national income, or NNP at market prices minus net indirect taxes. Next we will see net domestic product. Net domestic product is the total money value of all final goods and services produced in the domestic territory of a country less depreciation. GDP does not represent the true national income because it includes the full value of all goods, even the capital goods. These capital goods may depreciate in value in the production process owing to their constant use. This depreciation should be deducted from gross domestic product for the calculation of net domestic product. Therefore, net domestic product is equal to GDP minus depreciation or gross domestic product minus depreciation. Net domestic product can be calculated at factor cost and also at market prices. Net domestic product at factor cost is the total payments made by all the producers to all the factors of production within the domestic territory of a country. Net domestic product at factor cost and domestic factor income are one and the same thing. It is the estimation of net domestic product in terms of the earnings of the factors of production in the form of wages and salaries, rent, interest and profit. It includes the net value added by foreign nationals and business enterprises operating in the domestic territory of the country. However, it does not include the net value added by the citizens and business establishments of the country operating in foreign countries. We can say that NDP at factor cost equal to GDP at factor cost minus depreciation or NDP at market prices minus net indirect taxes. Now we will see NDP at market price. It is the market value of all the final goods and services produced within the domestic territory of a country during a year. NDP at market prices includes the contribution of foreigners residing in the domestic territory of a country. However, it excludes the contribution of the citizens of the country residing abroad. Now we can express NDP at market prices equal to GDP at market prices minus depreciation or NDP at factor cost plus net indirect taxes.